we can also arrange to come to your company and provide this HRD Corp approved training programs as well. So these are the companies that we did some training before. And as I mentioned just now, this is the book that we co-authored together. This is my wife, Mandy Hill. This is Casey Lau, and we co-authored a book called Money Tips for Doctors, because I have a lot of customers who are doctors. So we wrote a book related to how to manage money for doctors. This is my HRD Corp Certified Trainer Cert, CAP, RFP, and also interviewed by Sinchu Jipo. All right, so there's a brief intro about myself and my background. So thanks a lot for inviting me to come on the first webinar under kclau.com. Thank you, Casey Lau, for always remember to bring me along and come and learn together with all this stuff, all your readers. All right, so wow, we have quite a numbers. I didn't expect that because I thought today, first day of work, first day of school, many people might have other commitment. Thanks for attending, and I wish all of you here a happy new year 2024. And let's start with an important planning. If you have not done so, this is a very important planning that you can also include it in your plan starting from today. Okay, so what we will cover today will be understanding about insurance trust on a very basic level, but a practical way. So I will cover five topics. One is what is an insurance trust? How is it utilized for various financial or legacy purposes? Other assets that can be transferred and safeguarded under a trust. And what are the differences between a will and trust? Many people will be confused. Hey, will or trust? So sometimes they will be very confused. So I have done a comparison between these two estate planning tools, and also how to set up an insurance trust. If you wish to, then we can actually have a session with you. Okay, so but I will not go in sequence. I will be mixing around all these contents of the topics halfway through. So it will not follow exactly the sequence as we mentioned here. All right, so any other things to chip in, Casey Lau? If not, we shall start.
Yeah, let's do it.
Okay, is my voice clear?
Yes, of course.
Okay, that's good. Very good. Okay. Please help me to moderate the Q&A, Casey.
Yes, I'll do that.
Because I am unable to view that. All right. So okay. First question to ask: what is the percentage of a person passes on first day in the 2024? Don't ask this kind of question, pantang but nothing to be pantang of lah. We are now in these modern days. My father just passed away last week. Last week. During Dongzhi, Dongzhi, the winter solstice. Dongzhi, the day he passed away, and also went through the Christmas Eve, Christmas, and all this funeral. Just for info to share, because my father bought this NV package, the what do you call that? Fugui Jituan, in this Sungai Besi, there's one memorial park. That the first one at the Sungai Besi one, the time full packed, so cannot no choice, but they have to use the NV2 Nirvana 2. That one also full. Wow. So many people check in. We call it check in. So once it's check in, and according to the operator there, one of the senior managers, she told me that in December alone, there are about 20 check in, which involve ages from 30 to 40 years old. The check in. Wow. You see, wow, a lot of this year, really a lot. You never expected that. So you see, my father's lot, the parlor room, next door, my father already about 79 years old, so passed away because of old age. Then next door, 30 plus only, 31, 32 like that only, lung cancer. So it's very shocking nowadays. You look at the death rate nowadays. So come back to this question. So I hope you all don't pantang, don't be pantang. So we want to start new, but we want to plan for the worst and hope that something, when really something happens, then at least we are well prepared and our family members are well prepared. So what is the percentage of a person passes on? Come, give me an write in the chat box.
I thought this is
Okay.
a trick question.
So come, give me some feedback from replies.
Type in the chat box.
Just type in the chat.
I would say, what is the percentage of a person passes on?
What is the percentage of a person that pass away?
Should be 100%, isn't it? We'll die someday.
Every time when I ask this question in a physical
Yeah.
training, very, very interesting. Some of them even took out a calculator to calculate. Uh, okay,
It's a trick question.
so yes, ladies and gentlemen, yes, it is definitely is a one-way ticket, one-way ticket. So nothing to be afraid of, nothing to be, to be pantang of. Of course, some people will still have pantang, but then yes, it's 100%. But the next question is, have we planned for something which will happen 100%? Yeah. So this is another very important question. Are we well prepared for it? I think many people will die unplanned, unprepared. Just like the example that I said just now. The parlor next door of my father's funeral ceremony, so 30 plus only, 31. So it's very sad. Many people came because of young people. Young people pass away. When they check in, a lot of people come because the schoolmate, the classmate, so everyone came. So also quite sad. So we all hope that after we pass on, family would have the priority, right, over our assets, because we have spent our lifetime to build our wealth, to accumulate wealth, buy properties, invest, everything. So we accumulate our wealth. We hope that when we are not around, all these assets will be passed on to our family members, right? Our first priority, definitely our family members. But the problem is when a person dies, most of our assets will be frozen. I think this one, if you have attended many of these will writing estate planning talks, yes, definitely they will tell you that most of our assets will be frozen. Not all, it's most. So what are the assets that will be frozen? There are two categories of assets that will we leave behind two categories of assets. One is under the estate categories. Estate categories, for example, your Sendirian Berhad share. Many people thought that Sendirian Berhad will not be frozen. Yes, the Sendirian Berhad will not be frozen, will not be seized. But your share of transaction cannot transact. You cannot buy, cannot sell upon death. This will fall under your estate. Yeah. And next one, your sole proprietorship. This is the whole company. When a person pass away, when the sole proprietor pass away, the whole sole proprietorship will also need to be dissolved by right. If you are having a business, a sole proprietorship, please bear in mind that the business will pass away together with the owner, because it's a law. So partnership also, even you have two partners, one A and B. When A passes away, by right, legally, the company needs to be dissolved, right? But normally they will still continue. And when B take over the business, then he will need to re-register. Yeah, so these are the legal aspects. And also your shop lots, if you have accumulated, you have bought a few shop lots, yeah, so all this will be frozen. And even your house, your vehicles, your lands, your cash in bank, your joint account also, bank joint account. Some people thought that a joint account will not be frozen. Yes, it will not be frozen, because when A and B, when A passes away, B needs to prove that B can operate the money, but then it also need to safeguard keep the money to settle the debts of Mr. A, the person who passed away. So these kind of things, and also if there is no survivorship clause in your bank account, then when A passes away, B will they will also freeze the account. And also share investment, yeah, even your unit trust, etc. So these are the things, these are the assets. I believe most of us here have these assets, right? I believe most of you here also have all this, or one or two of these. All right. So this asset will be frozen because it will fall under our estate. Yeah. Whereas for the other categories is non-estate. And non-estate is your EPF nomination. If you have done a proper nomination in your EPF, yes, that one you do thumbprint, then it will be distributed according to the nomination. But bear in mind, for those who have already done your nomination many years ago, when you need to check from time to time, check on your app or check online whether your nomination is still there. Because previous experience, many years ago, some of them they have done the nomination, but the nomination disappeared. Don't know why. So you need to double check again. Don't assume that you have done it, then it's already there. So try to double check again, because EPF involve a lot of money. For those who have been working for many years, and you have you are holding a high position, so you have accumulated a lot of EPF money. Don't play. Really, a lot of money there, more than millions. So that one you need to distribute according to your nomination as well. And even your life insurance nomination, I believe most of you here have your life insurance. So if you have done the nomination according to FSA, Financial Services Act, all right, then it's considered a trust nomination. I will touch a little bit here about this life insurance nomination. And living trust, if you have set up a living trust before death, not after death, before, you must set up your living trust before death, then this is considered a non-estate. So it will skip all the probate processes, yeah. And also hiba, if you have bought a takafu insurance, then you can hiba to anyone, not necessarily your next of kin, like your spouse or children. Okay, so what we want to cover today would be this topic, living trust here. Yeah, so an estate planning tools that we can utilize to skip all the probates and will not be frozen. All right. Okay, so this is under non-estate portion, yeah. So I believe most of this you know already. So let's cover this topic here today, especially in insurance, how to combine insurance into a living trust. Next, then you will ask, hey, my estate, my asset, all this asset I accumulated by myself, I worked so hard, why you want to freeze my estate, right? Because you want to settle your debts or tax, just in case this person who passes away, you have outstanding debts or even some unpaid or underdeclared tax. So this is the last time and the final time that all the authorities will get money from you. So why they want to use it? Because all our, just now, the first question we asked, we want to prioritize our family to receive this asset, right? But the problem is, when a person dies, so all these tax and debts, and you need to settle first before your family can receive it. For example, funeral expenses, like what my father just they call it. He bought it earlier now, about 10 years ago. He bought the NV package about 10 years ago. So now only he use it. My mother also used it last year, 2022. Then my father follow the next year. So both of them rejoin happily in their world. And also funeral expenses, we need to spend, okay, quite a lot of money. This one, if you do not pre-plan it, okay, it involves quite a lot of money, more than about nowadays, more than for Chinese a lot of money on this one, spending money on funeral expenses. So easily more than 100 over 1,000. And funeral expenses, estate execution, administration fee, legal and accounting fees, LHDN. I will touch a little bit further on this LHDN, the income tax, and also your personal loan, your bank loan, credit cards, home loans. All these you need to settle before and also some financial unsettled financial obligation. For example, if you send your children to overseas, halfway studying, or if we kick the bucket, then who is going to continue to pay for the education fees, right? So these are the things that we might not think about, and we do not like to think about it, but you also need to plan for it. And also family living expenses, education fees, etc. So these are the things that will come first before it is passed on to our family members. Another thing that I want to cover here is this. Let's say you have a bank loan, for example. If you are having a joint name bank account, loan, if you buy a property to put under your name and your spouse name, so both of you, husband and wife, own the property, and also you all share the housing loan, the bank loan. So if A pass away, how do you think the loan will be settled? You see, so many people have never thought of this kind of question. A and B, let's say husband and wife. Husband pass away, the wife will need to go and get cash from other place or do refinancing to settle the outstanding. Then only you can transfer to the wife's name. These are the things. So sometimes where do we get this big lump sum of money from? Under this kind of situation, right? So you need to plan for it. These are the things that might might surface when things happens. Next, so then we need estate planning tools. If you do not have if you do not plan for it, if you do not use this kind of tools to settle or to mitigate, we cannot totally eliminate all the problem from estate problem, but then we can plan for it, right? We need these tools to help us to go through all these hassles, our family members especially. For example, will is a very important tools, very important estate planning tools that we should use. I'm not going to cover will today. Next one will be trust. So as I mentioned earlier, trust or living trust or whatever trust. Okay, so trust is a very important and very good tools for us to go through this estate planning issues. And also life insurance. Life insurance mostly more on the creation factors. All right, it will be created immediately. And also business succession agreement. Let's say you are doing business, buy-sell agreement is a very important tool. For example, let's say you have 3 shareholders under a Sendirian Berhad. So if one of them pass away, have you ever thought that how to deal with this disease shares, right? Because the shares you cannot do transaction during this period of time, so it will be so-called frozen. Even though your Sendirian Berhad is not frozen, but your shares cannot be transacted. You need to wait for the estate issues to settle, then only you can transact out. So how you want to deal with all these issues? So for those business owners, you may if you're interested to find out more, we can talk more about all this business succession agreement. And also power attorney. Yeah, power attorney is also a very important tool to use in your estate planning. And also proper nomination and life insurance of your life insurance EPF. Even this nomination also estate planning tools. If you don't do the nomination, all your asset, all your insurance or even your EPF money will be haywire, will be split according to the act, to the law. Yeah. So these are the estate planning tools that I will cover only on today's topic is life insurance trust. So I will cover this tool. The rest, if you are interested to find out more, then we can have another session. So we'll cover these two together. Now, we want to also touch a little bit on the Income Tax Act in 1967 Income Tax Act. So according to the Act, all outstanding tax needs to be settled even after death. So when a person dies, that year, following year, and any previous year that you short pay or you under declare your income tax, because previously many people even when people do business they do not pay tax according to what they are supposed to pay. They pay tax according to how much they want to pay. Then no, last time previously, now very few. Last time those olden days people, the business people, how they pay tax. They say, okay, I have 50,000 in my cash that I can pay tax. Okay lah, tell the accountant pay 50,000 this year. Like that one. But maybe he needs to pay more than that. But normally last time this is the way lah. So now you see, after so many years, you think income tax still have the right to come after all this as this under declared tax or not? Yes, they still have the right to come after your estate. So this is the last time, as I mentioned, this is the final time that income tax can put their hands in your asset. So they will not easily let you go. Next. So the problem is how would your executor or your administrator knows if a disease you owe any income tax or not? How to go and justify, how to go and argue, how to go and defend yourself, right? So when income tax come and check you, they say, hey, you have accumulated a lot of asset, but all the past 30 years, when you do your business, you only declare such a low income tax. So how to justify that? Your family members or your executor or your administrator also don't know how to justify, right? How to answer to that? So then if you cannot answer, then they will put any figure to you. So this is a big portion that might be taken away if you do not do your proper planning. Yeah. Next one, your executor needs to allocate a big lump sum of fund to settle your disease outstanding debts. You see, this is the act. The executors of the deceased individual shall not distribute any of the assets of the estate unless they have made provision for the payment in full or any tax which they know or might reasonably expected to be payable by them under this section. If you don't allocate the money for your, if the executor are not the beneficiary, the executor, the person who do execution job. Let's say, for example, if father pass away, you have 4 children. The eldest one is the executor appointed in the will. So this executor, he needs to be liable. He is liable to pay the penalties if you do not allocate this amount of money. See, before tax is settled, executor are not allowed to distribute estates to the beneficiary. If not, the executor is liable to settle the outstanding. Wow. You distribute to your other 3 siblings, 4 siblings altogether. You distributed your sibling to your siblings already, but then if anything happens, you need to bear. You alone need to bear for it. You say, hey, I distributed to my brothers, sisters already. No, no, no. They say they finish off the money already. So you go and bear for it. So who want to be the executor? Yeah. So these are the things that might happen. I'm not saying everyone will happen. Depends on your case to case basis. Especially for those business owners might have this kind of issues more. Right? If you are actually underemployment, all this while your company already declared your income and you also declare your expenses quite nicely, then shouldn't be a big issue. All right. Next. Now, if you were the executor, where to get the money from? Okay, let's say income tax come after you, say, hey, your father passed away many years ago. They still can come after you. So where you want to get the money from? Are you willing to, even you have the money and you also might not be willing to pay off, right? But you are liable. So where to get the money from? And also, and who is willing to be the executor? So if after you listen to this, you say, oh, you that one. You ask your father, mother, I better don't appoint you as executor. But if you don't be the executor, who you want to appoint be the executor in their will, so these are the things that you might need to consider and need to plan for it. Next, now, what is insurance trust? What is an insurance trust? Now, just a brief intro, the setup, the structure. Please remember this structure. So insurance trust is actually a trust. I say trust first. Now, a trust is the party who set up the trust. It can be individual or even an organization. So settlor, that is considered a settlor. Your name as settlor. You transfer ownership of the assets to the trustee. Let's say this settlor has a certain amount of asset or wealth or whatever, property, cash, or insurance policy. So you transfer your ownership of assets to the trustee. During lifetime, after death, cannot do already. You must do it before death or even during lifetime. Next. So all the term and condition it can be stated in your trust deed. Trust deed is something like an agreement. So this agreement, the trust deed or the trustee will help you to draft the trust deed to accommodate for your instructions. What are the things that you want the trustee to carry out or execute according to the trust deed? So everything will be stated in the trust deed. So this trustee will hold custody and manage your assets for the beneficiaries according to your trustee, according to your instruction. Then this trustee will take care of your beneficiaries. Okay, and the beneficiaries can be an individual or even organization or even to benefit from the asset. Some people, they want to benefit some of their religious organization, their church, their temple or whatever. So you can also name the organization as the beneficiary of this trust. So trust is a very, very good tool to be used, but very underutilized. People do not know how to use it, but trust is a very important tool in Malaysia that we can utilize for our estate planning purpose. Next. There are so many different types of trust setup or trust arrangement that suit different requirements. If you have different requirements, it needs to be discussed further on what actually is the best arrangement for your trust purpose. Okay, so we have living trust. Living trust is you transfer your assets upfront during lifetime, not after death. This is called living trust. Next one will be testamentary trust. Testamentary trust is a trust set up being mentioned or being set up in the will. You mention this testamentary trust arrangement in the will, meaning you need to wait until after death, then only the will be executed. And when the executors see there is a testamentary trust in the will, so they will follow instruction according to the will. In the trust setup. It's called a trust in the will. Testamentary trust. Next, revocable trust. A trust after you have set up already, you can revoke it if you think that you don't want to continue this trust. So for example, if your children last time before you set up all your children are still very young at the infant stage, so you set up a trust. But after when they have already grown up, or maybe they already reached the age of maybe 25, you can revoke the trust. This is called revocable trust. You can put in these kind of features. Of course, in living trust, you can set up revocable trust or even irrevocable trust. So it is not it is a features inside a trust. For example, if you are going to set up a living trust, you can put it as a revocable or irrevocable. Irrevocable trust, meaning after you have set up already, you cannot revoke until death. You cannot revoke it. Yeah, you cannot cancel off the trust. This is another type of trust. Why do people want to set up this kind of trust? Maybe because they want to avoid from the bankruptcy. So bankruptcy also has certain criteria to follow, and you can also set up an irrevocable trust. Yeah, and also charitable trust. So you want to benefit the charitable organization, you can set up some charitable trust just to mainly to pay some education fee or living expenses to those poor children so that they can continue their study. These are the charitable trust that you can consider to set up if you think that you want to help more people. And also custody and maintenance trust. Some people, they have old folks, old parents, or any young children to take care of, so they can set up some custody and maintenance trust to maintain their living expenses. And also insurance trust. Insurance trust is a policy. You can buy a life insurance policy to be transferred into a living trust. Then this is called insurance trust. Right, and many more different types of arrangement or different type of features that suits different people's requirement. Okay, so I stop for a while here. Casey Lau, anything that you think you want to add in, so that
Uh,
not only me talking.
no, maybe just a question here from Prabhakaran. He said, can you use the insurance trust for charitable trust also?
Can,
Right?
and you can let's say take up an insurance policy and then do a absolute assignment to the trust, to the living trust, or even your charitable trust. Then you can benefit more people. Yeah, this is a very good arrangement.
Okay,
Okay. Any other questions?
nice. Maybe we carry on.
Is it too technical? I'm not sure about the audience here.
No, I think you give a very good overview, so that we can understand what this trust is actually about.
Yeah. Of course, it
Yeah,
involves a
so
lot of
mm,
detailed kind of
mm,
planning, but then this is just on a nutshell, just a
yep,
basic idea.
yep.
Okay, next. So what are the assets that can be transferred or safeguarded under the trust? Okay, you can have your real estate, but your real estate properties, and normally it needs to be free from encumbrances, meaning you don't owe any bank or any outstanding loans. It must be settled already. Then you can transfer the real estate, your properties or your lands into the trust. Yeah, some rich people, they do that because they don't want the next of kin, the children, to sell off the properties. Some people, they have this sentimental values. They don't want them to sell the property, so they transfer the ownership of this property into a trust so that the trustee can hold on trust for them.
Mm.
Bank accounts, your bank, your cash, saving, or current account. Okay, this money, of course, the cash, you transfer it into the trustee's bank account, and not to transfer your whole bank account into the trust, but you can
Technically,
transfer
the
the
cash,
cash,
the money.
the cash into it. Investment, your shares or even your unit trust can be transferred into the trust. And business shares, even your business shares or business interests, you can also transfer in. And personal valuables, your property, jewelry, or your jewelries, or gold watch, all this Rolex. So your personal valuables, you want trustee to hold on trust. But it depends on whether the trustee wants to hold all this asset for you. But actually, you can transfer many things there. So different trustee has different preference. Some of them, they only want cash. Some of them, they only want life insurance. Some of them only want properties. So it depends. And also intellectual properties. Let's say, Casey Lau, you have written a song, very famous, like Yesterday's, the Beatles. So you put the loyalty into your trust so that it
Oh,
can forever benefit your future generation. Also, can
oh,
intellectual, or you have written the books, okay, you can put the royalty there. And also insurance policy. Yeah, so we will cover this today because it's a very big scope today. So I'm going to zoom in only to insurance related trust. Yeah. So, and of course, if you transfer cash or insurance policy, the process and procedures are much easier. But if you want to transfer properties, then the challenge is you need to be treated as you're transferring to another third party, meaning you have to get a lawyer, you need to pay legal fees, you need to pay stamp duty as well on the property to be transferred into the trustee. So when the trustee hold on trust, okay, and and it is treated as you are selling to a third party already. Yeah. And after you have transferred in, you cannot simply transfer out because you incurred another round of this stamp duty, all these charges, legal fees. So some people, they, unless you have really a lot, then you're afraid that your your children will finish off the properties or sell off the property that you do not intend them to sell. So at least you transfer into a trustee. So let the trustee hold on trust. Okay, and others, any assets that you can think of, you can actually transfer into a trustee to let them hold on trust. Next, how is insurance trust utilized for various financial or legacy purposes? Now, just quote an example, some practical example. So if both parents died, what happened to young children? Maybe some of you have very young children, or your brothers, sisters have very young children, and all of them are still at their infancy stage. But husband and wife, sometimes when they go out together, so they met with an accident or even on a flight or whatever. So when both parents pass away, so what will happen to the young children? You see, even previously during MCO in Selangor itself, 4,422 children suddenly become orphan. So how to solve these kind of issues? So who will take care of our young children? These are the questions that you might want to ask. Who will take care of your young children if both parent, husband, wife pass away? You say, hey, I have my other siblings, they will take care of them one, sure. But you want people to take care of your children, you also need to pay some allowance to them, right? And also how to maintain their living expenses, for example, their education, medical. You cannot say that, oh, never mind, when both of us not around, my young children, my brother will take care of them. And then you leave it to your brother. But your brother also want to one thing, right? Your brother also want to take care of his own family members. So where do they have all this extra fund to take care of your children? You say, I want to send my children to the best education, but can your brother afford that? And even medical bill, if you do not have life insurance or even medical insurance, so who is going to pay for their medical expenses? You know, nowadays medical expenses is very, very expensive, right? And also you say, never mind, ask them to put in the government hospital. All right. So these are the options that you need to choose. Yeah. Who can we trust with the wealth that we leave behind? And if both husband and wife pass away, who can we entrust this asset, this wealth to? Right? You say, my brother, I pass it to my brother because my brother take care of them. But who knows if your brother face any financial difficulties, macam mana?
Maybe is it like in business or they need some
in
money to
business,
roll?
they are very good people. But when you have a lump sum of money given to them, by right, this money is to be utilized for your young children living expenses. But then because they say, never mind, I take and roll first, roll. But once roll already, I cannot roll back. These are the things might happen. I'm not saying that it will definitely happen, but it might happen. You need to think about it. And also next, have you appointed a guardian to look after your young children? You can appoint a guardian in your will. In the will, you can state your guardian. You can appoint someone that love them to really able to take care of them. Right? So you can appoint the guardian, but how is the guardianship allowance being paid? You want to pay let's say your brother, your brother is an appointed guardian in your will. So then are you going to pay to them in a lump sum or regular basis? So how are you going to pay to them? So these are the questions, these are the problems that might surface when these kind of issues happen. So who will take care of your young children? If there's a will, you can appoint a guardian. Appointing a guardian is very easy. Just state the name, IC, just call them, hey, when both of us not around, you take care of my children. Your brother say, okay, no problem. You see, appointing them in a will is very easy, but making the guardianship effective is very difficult. Is the guardian willing to take care of your children? Not only 1 month, 2 months, 3 months, or maybe it's a lifetime kind of effort. And is the guardian capable of taking care, caring for your children? Because they also have they need to spend time on their work, on their own family. So whether they have the capability to take care of your children, and does the guardian have the time and money to take care of your children? So that's why people will say, hey, I buy insurance, I buy life insurance. Okay, life insurance is very good, very important because in this Financial Services Act 2013, if you have bought a life insurance policy and you nominate the right people, who you nominate to? If you nominate your spouse or children, or if you're single, you nominate your parents. This category of people, when you nominated, then it shall not, the insurance money, let's say you bought a 3 million life insurance policy, the money will be paid out, shall not form part of the estate. Just now we mentioned already, there are two categories. Right? It is not part of the estate. It is stated in the Financial Services Act, Schedule 10, Section 130, Paragraph 5. So it stated that a payment under subparagraph, this one, if you nominated the right people, shall not form part of the estate. It will not be used to settle your loans, your outstanding debts, or whatever. The estate of the deceased owner or be subject to his debts. You see, no need to pay tax. No, so good. Then you go and buy big policy, right? It's good. I'm not saying that it's not good. So this one I'll skip first. So how would your large sum assured life insurance be paid out if you have bought a 3 million life insurance policy? They say, oh, never mind. They say, hey, what if both parents, your agent come and approach you, what if both pass away? So, okay, never mind, we have a 3 million life insurance policy. That is very good. So, but although you have nominated a trust nominee, what if both husband and wife die at the same time, right? Who would receive the insurance payout on your young children's behalf? Then you say, hey, in the life insurance policy, if you have nominated the trust nominee, that means you can appoint a trustee, right? So maybe you will say, hey, I have appointed a trustee in my life insurance policy, right? So you say, I have appointed my brother, another brother, to be the trustee of your policy. Can be done, very good. That means this money, once paid out already, it will not be subject to debt. Very good, very important. So, but the problem is that what if the trustee is not trustworthy, or maybe they use up your money for their own purpose? This is another question. You see, 3 million, okay. Now you know them, is very trustworthy. My brother, also take a 3 million. So once they receive this 3 million, there is no guarantee that they will be used fully on your children. See, and also, or the trustee pre-disease. What if they receive the 3 million? Now they will really take care of your children. But if they pre-disease you, so where do the money end up at? See, so these are the questions. These are the problems. So that's why now we combine insurance and trust. These two things combined together become insurance trust. This is the major thing that we want to cover today. So all your above worries can be solved by setting up a family insurance trust. What you can do is, if you have a big sum of cash, means cash. Let's say you have 3 million of cash. So what would you do is you transfer the cash to the trust corporation. You sign the trust deed, state all the instructions in the trust deed, how you want to distribute the money. So your trustee will follow exactly how you want to distribute your money. For example, let's say the 3 million, you say, okay, I have two young children, so I want to pay them allowance every month, 2,000. Then at the same time, you can also ask the trustee, trust corporation, to hold your 3 million cash to pay allowance. Pay to the guardian. Let's say if the guardian is your brother, say, okay, since my brother needs to employ someone to take care of the children, okay, I pay 3,000 allowance to the guardian, so that at least he can still continue his work and at the same time employ someone to get someone to take care of the children. Or even maybe the wife, if is taking care of your sister-in-law is taking care of their own children, maybe the wife no need to work outside, then maybe you want to stay at home, or the vice versa. Let the husband stay at home and the wife go out to work, also can. But at least you pay them allowance, right? So allowance at least to buy something to take care of your children as well. So these are the things that you can arrange in trust. I'm saying trust only. So the trust corporation, what they will do is for the benefits of your minor children. Until what age? Then you can say, okay, until what age? Okay, after that, no more. Stop. Then because they come out to work already. So these are the things that you can spell out detailedly, very detailed in your trust deed. Then the trust corporation will help to follow and execute through. But there's one concern by using cash. If you have a cash 3 million, okay, the trust corporation will start to charge a fee to safeguard the money and help you to invest. For example, okay, let's say the 3 million. 3 million every year, trust corporation will charge maybe 1% to 2%, or maybe some of them charge 1.5 or maybe 0.75%. Depends on trust corporation, depends on who you engage with. So the trust corporation will start to charge once you transfer the 3 million into their account. So they will start to charge on it. But of course, you can ask trust corporation, hey, You help me to invest. Okay, I help you invest. Invest in where? Also, you can state you can also state the where to invest. You say, I don't want to take risk. I don't want to then put in FD. FD maybe 3 or 4%. So let's say if FD giving you 4%, so minus off the 1%, you still have an additional 3% positive every year. So at least something lah. Then at least your wealth will continue to grow. Okay, so you can also do that. So there's one concern which they will start to charge immediately once you transfer if you use cash. Okay, but what if you do not have a big lump sum of cash? Then you say, I also want to take care of my children. So, and you do not want to pay the 1 to 2% of management fee. Apa macam? Then you say, okay lah. Then I use life insurance. Life insurance, this is a very good way or very good timing that you can use life insurance to transfer into your trust corporation, into the trustee, so that upon death, your 3 million of life insurance paid directly to the trust corporation. This is how it works. You may use your life insurance policy, even your existing current policy also can, or you say not enough, I want to buy a new one also can, you want to top up. So you can, okay, I use life insurance, let's say 3 million. I transfer, do absolute assignment to the trust corporation, and also the trustee will also help you to draft out a trust deed and state all the instruction in your trust deed. And from here, upon death, okay, 3 million will be pumped into the trust corporation and and take care of your young children until they reach age maybe 25. So this is a very good arrangement where you can use life insurance to multiply or to double up or triple up your wealth for the benefit of your children. Then you can keep your 3 million cash that you have accumulated so far for your own use. You just take this 3 million cash and put into FD, generate 4%. You use this 4%, just maybe 2% to create another 3 million under life insurance. You double up your estate already. So very good arrangement. So how it works is during lifetime, if you're the parents, so you take up the policy, let's say 3 million of life insurance policy, you do absolute assignment. You do absolutely assign the large insurance, some insurance policy. Don't transfer the medical card, don't transfer the critical illness. Purely life insurance will do. Because when critical illness or maybe hospitalized, these two, you need to use it during lifetime. Only for life insurance, upon death, you transfer. These are the policies that are suitable to be transferred. Don't transfer medical card, don't transfer critical illness policy. So absolutely assign the large insurance, sum insurance policy to the trustee. You state all the term and condition in your trustee. The trustee will safeguard the life insurance policy, proceed from your claim. Okay, let's say upon death, the money will come in, and then the trustee will start to take good care of this money and pay out the money to your young children according to the trustee. Whatever you mentioned, whatever you ask them to do, they will follow. Yeah. So under the trustee, and also to take care of the benefits of your beneficiaries, so they can pay money monthly to guardian to take care of your young children, living expenses, medical, or even education. You can state that even on a monthly basis. Or when your children, let's say you want to you have a dream to send your children to private school, even primary school, you want to send them to private school already. Okay, so at least you get the enrollment. You double confirm. You say state in your trustee. You say okay, when my children is successfully enrolled into a private college or private school, so then show me the enrollment confirmation. Okay, show the trustee, and you can ask the trustee, hey, show it. Ask the guardian, bring the enrollment confirmation. Show to the trustee. Hey, according to the trustee, whenever the young children is admitted to what school, please pay this education fee, the tuition fee, the living expenses. Okay, the trustee will pay accordingly. So these are the things. Even this kind of instruction, you can also ask the trustee to help you to carry out when we are not around. You see. So, and even medical bill, of course, it cannot simply claim from the trustee. Okay, you must prove that you have paid for the medical bill already, then claim later. Up to you. Or even ask the trustee to take out a life insurance or medical insurance on behalf of the children. So the children also can benefit from the medical insurance. So these are the things you can put in, or whatever that you can think of, you can put in. Next, so advantages of setting up a insurance trust. just now I said trust is very important, right? Very good. So either you put your own cash or you want to put life insurance. So now what are the advantages of setting up life insurance, insurance trust? Because your monthly living expenses, instead of lump sum, you are just paying not in lump sum to the family members, but on a monthly basis. You can provide allowance to the guardian, and also have trust corporation to take care of the big lump sum of money, avoid estate being frozen. This is another estate planning tool. It will skip all the process of frozen, of the estate being frozen. Avoid your estate being frozen. It can skip that. And also skip a long and messy probate process. This might take years. And also money in the trust is not subject to settlers, creditors claim. Term and condition apply. This one, trust, term and condition applies. It must be, if you want to avoid the creditors claim, actually you need to set up irrevocable trust in Malaysia. That one detail we will not cover here. Other benefits of using life insurance as your trust asset is creation factor. This is something that is very special under life insurance. Only life insurance has this creation factor, meaning you pay a small premium and get a big lump sum of coverage, and you do not use the insurance proceed money until death, right? Because upon death, only the money will be paid out. So during your lifetime, you can use your other cash instead of using the life insurance proceeds. So once they pay out already, then only trust corporation will start to charge. See, this is very, very interesting. If you use other cash, they will charge you immediately upon transferring the asset. But if you use life insurance, you just transfer the life insurance into the trust corporation. That's it. They don't charge you anything before the trust. No, you need to pay the setup fee, but the fund itself, they don't charge you on the fund. Okay, let's say you have a 3 million life insurance transferred in, they will not charge you on the life insurance sum assured.
Because the money is not there yet.
The money is not paid out yet because the money is still in insurance company, not yet being managed by the trustee. Yeah, so this is the advantages of putting in life insurance. And the trust corporation will not charge the annual maintenance fee before death, before your money pay in, and also it will only charge the annual fees after death, to be deducted from your fund also. For example, if you have a 3 million life insurance, upon death, pump into the trust corporation, so they will only start to charge maybe 1%, for example. And you can also instruct them to invest, maybe in bond market, in money market or whatever. You get a maybe 4% return. You minus off 1%, you still have 3%. Also can be done that way. If you have not enough time to accumulate 3 million cash, even you have also no need to use your own cash, right? So use the insurance money, insurance company money. All right. So I want to share a kisah benar that I read from one of the news. You see, 2 years ago, after her husband was killed in a freak accident, while working at Changi Airport's budget terminal, she received nearly 1 million in insurance payout and donation from the public. Today, that money is gone. Just 2 years. You see, 2 years can finish off 1 million Sing dollar. Sing dollar, this one, ladies and gentlemen, in Singapore dollars. Madam Pusparani Mohan, 34, is now looking for work in Singapore to support her 4 children back in Johor Bahru. Need to come back to Johor Bahru and work in Singapore, but then the children are still in JB. I made a mistake. She said that people knew I had so much money and they all came to me. I'm stupid. I never buy house and finish all my money meant for my children. So she told the Sunday Times from her home in Skudai. You see, under this kind of situation, this is the case. 1 million Sing dollar, not ringgit, gone in 1 year. Widow of killed Changi Airport worker is now broke. You see, your husband left behind such a big amount of money for you and your children. But if you do not have, even there is a life insurance, but you do not have a proper setup or proper arrangement for the subsequent usage, so all this money will be gone, and you need to continue to work. And the time of working, you see, is worse, because when your husband is around, your husband can work and you can take care of your children. But if now your husband no more already, money also gone already, and you alone need to support the family. So you imagine the length of the time that you need to spend on work to sustain the family is even longer. So meaning when the children lost the father, they also partially lost the mother already. Very sad, right? Now, if the late husband knew there was a trust arrangement, you see, just imagine now Sing dollar 3.4, 3.5, 3.4 something. So if you have 1 million Sing dollar, for 3.4, you pre-set up a living trust. The 3.4 million multiplied by 4% annual return, you get 136,000 every year just on the interest itself, and 11,334 every month divided by 12, right? So meaning, and your capital is still intact. So it is definitely enough to sustain for the family for a very long time, right? So the money is held in trust or by a lawyer and will not be misused or defrauded. So these are the arrangements that actually you can consider, right? To avoid this kind of sad story happening now. So now the only disadvantages of setting up an insurance trust from 1st of January 2022 is your stamp duty, and LHDN suddenly come in and charge this stamp duty on your sum assured, ladies and gentlemen, not the premium that you pay on your sum assured. Okay, how would it charge? It according to the tier, 1%, 2%, 3%, 4%. Yeah, so just like you're transferring a property. So this has actually impacted the whole industry. Okay, it has done a lot of impact to this industry. Initially, it was a very good arrangement whereby when you do absolute assignment to trust corporation, only charge 10 ringgit nominal fee, but stamp duty. But now they'll pay according, you need to pay stamp duty according to sum assured of your life insurance policy. That comes to a big amount of money, 20 over 1,000 for 1 million of what do you call that, insurance policy. So
20 over 1,000.
24,000,
24,000
for 1 million for the first million, then subsequent million like it was, right? So so this is what do you call it, an implementation that I personally think that because the money is not materialized yet, it's not being paid out yet. So at least you charge on the cash value or even the premium, also no problem. But you charge on the sum assured, it's really a lot, really a lot. So anyhow,
so the LHDN is coming over the money that has not been paid out yet. Okay. Okay.
But there are still ways to do it. Some trust, some creative trust corporation, they can still do it. This one, we
KC
cannot
also
say.
know the way. Yeah, cannot
We
publicly
also know
tell
the
you.
way. I cannot publicly say.
Yes.
You want to know, you come and see me.
They will. They'll definitely help you to save the money lah. Okay.
Yeah lah. Okay. All right. So I cannot share openly. So now next, okay, put aside the stamp duty. That one can be solved if you want to.
Can be
But
solved.
another question that you need to ask yourself: hey, after listening to all this session, do I need to really start up a trust arrangement? Do I need to really start up a trust arrangement? If you have, okay, these are the scenarios, these are the situation that you may consider. If you have young children or special children who are unable to take care of themselves, hey, this is a very good arrangement. Yeah. Put aside whether you use insurance or your own cash, because these two also can be done. So if you have young children and you're afraid that just in case husband and wife pass away, or even one person pass away, also you're afraid that the other person, the other spouse, do not know how to manage the money, just like the lady just now. So this kind of situation, do you think that is important? Yeah, I think it is good to set up a trust. You might not need to transfer 100% of your wealth into the trust. You just transfer partially, or just buy a life insurance, just transfer the life insurance will do. Yeah. Okay. So if you have elderly parents to take care of, you're afraid that if touch wood, the younger one, or like the younger one, 30 plus, 40 plus, gone first, then the elderly still around, the parents still around, you also need to take care of them. So at least you set up a trust. Otherwise, where would you entrust your wealth to another person to take care of your own parents? If you transfer lump sum to them, then maybe they will also run away with the money. So you worry that if both couples live at the same time, and also you need someone to take care of your properties upon demise, and also you worry if current savings are not enough to take care of your children's living expenses. You're afraid that, hey, not enough, I'm afraid not enough. And then buy a life insurance. If not enough, then buy a life insurance, transfer it into a trust corporation, then let the trustee take care of your young children. Until maybe they are 25, you revoke the trust. Yeah. Not enough time to accumulate a larger amount of fund to set up your trust, then you use life insurance. So there are, of course, other purposes of having a trust. Inflation during retirement, you can also during your lifetime, you can also ask a trust corporation to take care of you for your retirement. Okay, you can also state inflation rate. Okay, you can also give increment. You're afraid that some people, they're afraid of business failure, or even victims of money games, scams, high investment risk. You heard of 70 plus, 60 plus over retirees, their whole lifetime saving being scammed. One time, 7 million, 3, 8 million, 5 million is always coming out from the news. So by putting certain amount of your wealth into the trust, actually you can safeguard your living expenses at least during retirement. Yeah. So that it will not be scammed so easily. And also old age mental sickness, Alzheimer, Parkinson, you don't know how to take care of your children. This is like my father, about 1 year before he passes away, he passed away. So he couldn't actually go to the bank and manage his account anymore. So how? Very susah. So bankruptcy, divorce, okay, these are the things that you might consider to set up a trust. So unable to monitor or manage your investment, dispute over distribution of wealth, share of distribution or disposition of assets. So these are the things that I'm not covered in detail, right? So come to the last portion is the differences between will and trust. So many people confuse between will and trust. It's really very confusing. Initially, when we learn, hey, what is will, what is trust? So don't worry if you are confused. Let's try to understand both of them. In terms of document, will, you need to write a will. A will need not to be stamped. Okay, you can anytime write a will, all right, and it can be valid, but of course you follow the rules. There are some requirements under a will. And trust, there is a trust deed, it need to be stamped. Will no need to be stamped, trust need to be stamped. All right, next one, when effective, will after death, trust, living trust. If you set up a living trust, immediately. If you set up a testamentary trust, it will be take effect upon death. And ownership of the asset is original owner. You are still the original owner until death. Okay, but the original owner still holding the ownership of the asset under a will. Okay, you can change your will anytime. Even you sell off the property already, it will not affect your will, because once they open up, no such property, then no more. Trust, you can only transfer the ownership of the asset is being transferred to the trustee. So under the trust, and settle debts, yes, in your will, whatever stated in your will, your cash, your investment, whatever, you need to use it to settle your debts. Whereas for trust, if you set up a trust, if it is an irrevocable trust, more than 5 years, it is safe. So it can be safeguard for your next generation. And court order, grant or probate, do you need to wait for that? Yes, in will, you need to wait for court order or grant or probate. Whereas trust, no need. Trust, once you have settled it, done it, then no need to wait for court order. It can take effect separately. And also revocable, will, yes, during lifetime you can revoke it anytime. Trust, if revocable trust, yes, you revoke it. If it is an irrevocable trust, then cannot revoke. Distribute what asset? All assets under your estate, as I mentioned just now on the left hand side, all the estate, all assets under estate, you can state it in the will. And whereas for trust, only those transferred to the trust. Whatever you transfer to the trust, then that is to be distributed according to trust. Whatever that is not being transferred to trust, it is outside, you follow the will. Yeah. And after death, all estate will be frozen under the estate category. And for your trust, assets in the trust will not be frozen. It can be utilized immediately after death when it is being effective, and can arrange for how many will. One person only have one valid will upon death. You cannot have 2 or 3, and then it's arguable. Then you will need to prove which is the latest one. Then only the latest one can be used. Anything before that cannot be used. Yeah. And trust can be more than one. You can have 1, 2, 3, 4 different type of trust. Also can, no problem.
Yeah.
Assets in debt, no problem. Whatever, let's say you have a property still owing the bank, you can still also put in your will. Whereas your trust cannot. You must be free from encumbrances. Yeah. Okay.
Awesome.
12 o'clock. Wow.
Awesome. Nice. Hey, a lot of information. I didn't expect that you are going to like share so much. But
otherwise, how to manage the expectation of your highly qualified audiences.
Right? Okay, awesome. There are tons of questions flowing in. So so let's get started, and we will answer it quickly. So the first one, KK asking the replay. Usually I do this kind of like public webinar. I have it live stream on my Facebook. So it will be there at least for 7 days, right? So after 7 days, I will archive it, and only my paid members, those people who support my business, they are going to get all the summarized notes, recording all the time. So thanks for asking this. Okay, Cassandra, can a trust be used to circumvent Faraid distribution for Muslims?
Okay, for Muslims, actually, you can arrange with those Islamic Sharia compliant what do you call it, trust corporation.
Oh, okay.
Those they are Sharia compliant one. So if you use a conventional one, sometimes it might be what do you call it? It might be
Dispute.
Not say dispute. Whatever that you transfer already is still okay, but just that maybe it involves some religious kind of issues, Sharia issues. So it's better to look for those Sharia compliance Islamic what do you call it, estate trust corporation.
Estate.
So they will do all this for you, and whatever asset that you transfer in, it needs to be halal, so-called halal. For example, you cannot transfer conventional insurance into the trust. You can only transfer your takafu. So you must buy takafu to be transferred there, and then let that trust corporation help you to do the setup. It is almost exactly the same arrangement. It's just that one is Sharia compliance, another one is conventional. So depends on which one you want to go.
Like I understand that like the most famous wheel writing company in Malaysia is Rock Wheels. So they also have the Sharia compliant version, which is called Asalihin, right?
Yes, correct.
So you can actually look for them. I don't know, Casey Chong, do you have Asalihin license?
Can. We can
also,
arrange.
right? Okay, good. So good question and good answer. And Xiahua want to know, what are the costs associated with setting up a trust? Is the expense yearly and deducted from the trust? I think there are 3 expenses, right? The first one, initial setup.
Yes. The draft out the trust deed. It depends on your content of your trust. So I would say maybe from the range, if it is a very simple one, so maybe from the range of maybe 1,000 to 2,000. So if it is a complicated one, then maybe it will go up to 3,000, 4,000. Depends on the fee structure of the trust corporation. Because I'm not here to promote anyone. So you have many choices. But the arrangement, the planning, you can go through us. So we can help you to do the planning. Then you will look for the suitable trust corporation for yourself.
If you don't know, then Casey Chong also can recommend.
If you don't know, we can recommend for you. If you think that and you're right.
So the first one
is draft out the trust deed.
Yep.
Okay. Some are cheap, some are medium, some are expensive. So it depends on your content also. Yeah. So that one is first thing. Next one is
transaction. When you put your money in.
When you put your money in, no big charges. It's just that once you transfer, depends on what you transfer. Normally, I recommend my clients to transfer insurance. Insurance much better. All right. So when you transfer your insurance inside, as I mentioned just now, there is a new charges.
Stamp duty.
That one you need to pay. But there are some companies also can help you to save on this. But I cannot say out personal, private.
But property also same stamp duty.
Property also same. Stamp duty. Charges, okay. And cash.
Cash
also,
okay. Cash okay.
Cash okay. Cash you transfer in, then it will stay there. Then the third charges that you mentioned just now, they will start to charge on your cash on annual basis.
Yeah.
So let's say you transfer 3 million cash into the trust corporation, they will start to charge immediately, maybe 1%. But you also can ask them to invest. After invest, maybe you get 5%, you deduct 1%, so at least you still have 4%.
That's called the trustee fees, just like how unit trust function also. Because like unit trust, when all the money they collect from the investor, they also leave it to the trustee to manage it. Not to manage it, to safeguard it. So the trustee actually charge a trustee fee, right? So this is the trustee fee, same thing.
Okay. Just like your unit trust, like what you say, your unit trust also have trustee one. Your unit trust, there's a fund management company, there's an asset management company, and also a trustee. So by right, the asset management company, your unit trust company, once they receive your investment, they are supposed to put into a trustee one.
Yep. Okay, related.
In and out very susah lah. So
Yeah. Okay, related questions. That means when you put your money in the trust, and then you can instruct the trustee to invest for you. So
yeah.
if there are no specific requirement, they usually just put in FD. But if you have specific requirement, let's say you say engage this fund house, engage this fund manager,
Yes.
or you want to invest it in S&P 500 or certain stocks,
Yes.
you can instruct that and they will do it, right?
Yeah, correct. But there are some charges incurred lah.
Okay, that will be incurred by maybe another third party involved because you'll be fund manager and fund manager will also charge you.
Yes, correct. Some already included in the annual fee. They will share with the fund managers.
Oh,
Whatever annual fee that they charge, maybe they will share with the fund manager.
yeah. Okay, so Casey Zong, now the sensitive question. So there are trust company I think in Malaysia who will tell you that they don't charge the kind of fees, no trustee fee, things like that. But they'll give you a return some more.
Okay. I know
So
what
a
you
little bit
said.
sensitive, right? A little bit sensitive. But
Never mind.
this kind of
Later
program is like,
people sue me in court. I don't want to say.
yeah, okay. So we skip. We don't want to attract trouble. Okay.
Yeah. I just want to enjoy my life.
Yes, me too. Okay, next one, Vision. Does inheritance attract tax and stamp duty? Inheritance. That means when your heirs get the money, right?
In Malaysia, so far, there's no inheritance tax. So whenever you mean whatever when your family members, your children receive the money from the trust, you mean? Or directly from your estate?
Isn't it the same?
Different.
Different. Okay, let's talk about estate.
Okay, so let's say estate, you have your money in the bank. Okay, after being unfrozen, after you settle everything, so when your next of kin, your children receive the money, okay, this one no inheritance tax but for your trustee or whatever that you put into a trust, then the monthly maintenance fee, that one are also no tax
No tax, right? So
inheritance tax.
so the result is
in
still
Malaysia,
no tax
Malaysia not yet.
But the trustee, let's say the trustee, you have a trust and then they receive monthly income. So that kind of income, that kind of allowance, does it subject to income tax?
Yes.
Oh,
correct.
It is.
That one, if let's say because the trustee, when they ask the fund managers to do the investment, so some are subject to some, let's say there are some tax incurred, but not the, what do you call that? That one I'm not very sure how they deal with the tax, but they will go through the audit one. They will go through the audit. Whatever is supposed to pay, they will still have to pay one. But not much. Normally they don't.
That'll be the trust part, right? But then how about the people beneficiary who receive it, the allowance every month? Let's say your children, they receive it. That one no issue, not considered income, right? Doesn't form part of your income and then getting charged tax.
Right. Yeah.
Okay. Good. And Adeline, real estate under loan and charge cannot transfer until loan fully paid and discharged. Yes, like we mentioned it a few times.
Yes.
That means you have to free of encumbrance means no loan.
No loan. Must.
Okay, Kennedy Budak, real estate still under bank loans cannot be put. Okay, same question. Okay. Next one, Derek, need to do absolute assignment for insurance to the trust. Yes, we talked about that, right?
Yes.
Okay, next one. T.Y. Tam, if both husband and wife pass away in an accident and both have separate wills prepared, how to determine who deceased first in order to administer the will according to their respective wishes?
Very technical.
This happened, because husband and wife, you go on vacation together, right?
If you go together, if the what do you call it, the doctors or the police cannot prove who go first, then they will assume the elderly, the elder one go first.
Okay, the elder one.
So meaning once the elder one go first, the will be transferred to the younger one. Then from there they go and argue.
That means when you write your will also, like as a husband and wife, you have to have some common ground, right?
Correct. They will also, in the will, you can also put this kind of clause. That means if your beneficiary die within 30 days after you, then they will treat this as a what do you call it? It will skip this beneficiary. They'll go to another next beneficiary. Yeah.
I see. Then that will avoid that too. Okay, awesome. Good answer. And can Alo Maja want to know, can a trustee go bankrupt and therefore all asset under trust become liquidated? Trustee go bankrupt. Okay.
Yeah, trust actually is a very old is being formed under a very old act, 1949 Trustee Act. So not easy to set up a trust corporation. It needs to go through a very detailed checking by the authorities. So once you have set up a trust, your account, your own personal account, even though you are bankrupt, your what do you call it? The fund that you're holding on behalf of others is actually a separate account. So you cannot mix these two accounts. So once your company, your trust corporation bankrupt, so the authority will come in and transfer all the asset hold on trust to another trustee.
Yep.
So once they transfer to another trustee, the other trustee will also follow the instruction earlier.
Casey Chong, I don't know in history because I didn't study a lot of this, but the likelihood of a trustee going bankrupt is less likely to happen, more like maybe misconduct of the trustee company, right? Probably the probability of like trustee misconducting
Correct.
is more than they going bankrupt, isn't it?
Yeah, correct. But then if you really manage the fund for others properly, nicely, accordingly, so I think shouldn't be an issue. Only that their own, like what you say, your own company operation misconduct or whatever. So that one might also cause the trust corporation to collapse. But then the authority will come in and take over this asset and transfer to another trustee. Some companies, some trust corporation, they close down. There are many trust corporations, they also close down. Trustee company, they close down. Then what they do is they have a proper transfer to another company, another trust company.
It will be overtaken by another company who or just hand it over to them. Right. Okay, so anyway, because trustee, it doesn't have to be a trustee company, so you can actually appoint a person.
Yes, you can
even a Sendirian Berhad, right? Even
yes,
the Sendirian Berhad, right? So,
yeah.
but still till now, like still the most trustworthy still the trustee company lah. That's the
There's
best choice to go with.
No better option.
There's no
If
better
you want
option.
to solve this kind of issue, no better option.
And
so
trustee is supposed to be trustable, isn't it?
Yeah, correct.
Okay, let's move on. Trust corporation charge 1 to 2% from principal or from the FD interest earned.
From the principal.
From the principal, from the whole lump sum that you have.
Some they charge maybe 0.75, some they charge, depends on companies.
They give you more discount when you put more money in.
Yeah, correct. You're right.
Okay. So Jackie want to know, I heard lately one have to pay stamp duty in order to transfer insurance trust to the trust company. Yes, correct. So we mentioned about it. 2022, right? January 2022.
2022, yes.
Yeah.
1st of January. Well, immediately, very quiet one. No. Nobody, not many people know.
Nobody do this business.
Once you go you only knew it when you do the absolute assignment.
Oh.
And initially, some charge, some don't charge. So quickly go to those.
Even the staff themselves in working in the LHDN also not too sure, right? When to charge, right? Okay, but now it's official. Okay.
Not officially. No,
not official.
No.
Okay. Papa Karan want to know, like absolute assignment incur the stamp duty cost. So can we do the insurance trust without absolute assignment?
Trustee, they don't take it because if you don't assign it to the trust corporation, you can change the nomination anytime. Then at the end, the trustee can't receive the money.
So then, if that happens, also it's not effective. Right?
It's like not setting up any trust.
Yeah, you do the document, but nobody's going to. They're not going to get the money, and nothing happened. So, but there's a way to save the stamp duty, right? You contact Casey John. Yeah, he will tell you. Yes,
but
but we cannot do this openly.
You know.
We also don't want to attract problem, right?
Yeah.
Okay. The payout, GF asking, the payout from life insurance only happen after death. So how much and when will the fees for the trust start? We talked about that also.
Okay, if you set up an insurance trust, the first setup fee, 1,000 plus or 2,000, depends on how complicated is your trust deed. Then after that, no more charges. But because of a stamp duty, you have to incur another stamp duty when you transfer your policy into the trust. So maybe after 20 years, only this person passed away. So when this person passed away, the life insurance proceed will be paid to the trustee. So the trustee, once they receive the money, they will help you to manage it accordingly. Then only
they start charging.
They start to charge.
And
compared to if you put cash, immediately they will start to charge.
They'll charge. But if you have a lot of money, then it's okay lah, right?
Okay lah, never mind.
Yeah, if you have a lot of money, it's okay
After
lah.
all,
Right?
you can ask the trust corporation to help you invest,
So it's pay out of the fund itself, right? You don't have to come out with from your pocket. Extra from your pocket, I mean. So and there's also cases where, you know, when you set this up, maybe your children are like 4 years old, 5 years old, but after 20 years they all become adult already. So everybody can make money on their own, so they're independent. Then you can just revoke this trust. You take back your insurance, and then nothing happened, right?
And one more thing, when you revoke and reassign back, also another round of stamp duty.
Stamp duty. Hey, like for me, I set it up more than 10 years ago. Right, actually 15 years ago. So at that time, no stamp duty. But now, if I revoke it, there's stamp duty.
Yeah, correct.
But also there are also ways to save it. Yes. We know, yeah. Okay, Casey Zong told me, because we had his talk about this, and I asked him privately, then I understand why I cannot tell publicly. Yeah. Just like how we earn the air miles, you know.
Yeah. You tell out, people don't value.
Yeah. Also cannot say openly.
No,
not that we don't want to say, right? So LHDN will charge a stamp duty when absolute assign the insurance policy to trustee. That how much is the stamp duty and how can we minimize this tax? So this one you ask privately. So the first million, 24,000. The second million, more than 24,000.
It has a tiers one. It has a tiers per policy. Let's say you have 1 million sum assured 1 million. First 100,000, 1%, 1,000. Then from 100,000 to 500,000, 400,000 multiplied by 2%, 8,000. Then from 500,000 to 1 million is another 500,000, 3%, 15,000. So the first million already 24,000. Then if 2 million, then additional 40,000 on the second million.
4% on 1 million and above. And then 2 million above, another fees?
No, maximum.
No, 4 is a.
4 is a max.
Okay. So it's per policy, right? So that means if you have 1 million, 3 policies, then you also save. You also save stamp duty. Okay.
There is one of the ways to
but we have a better way. But Casey don't have a better way. You pay less than 24,000 also. Okay. Yeah, he'll tell you. You have to ask him privately. So how do they ask you privately, right? You haven't shared your contact. Yeah. Put that up. Okay. No, they are cursing us already. We are keeping them around.
I
want Casey Chong contact.
Especially for today's this Casey Lau session only, because we are brothers and also want to have a good kickstart for 2024. So we will allocate 1 hour one-to-one trust consultation. Identify if there's a need for trust arrangement. If there's no need, what for you do all this hassle, right? Next one, we will help you to calculate how much fund is really needed in the trust arrangement. For example, if your young children, you need to calculate until they reach 25, how much fund that you really need in order to sustain your trust until they are age maybe 25, for example. Or maybe you say, hey, I want to take care of my parents until they go away, maybe until age 85. So whether you have enough fund for that. Then next one, help to identify if life insurance is needed in the trust as well. And also discuss how much would be the cost of setting up a trust that suits your needs lah. Because different type of trust has different charges, and also so this one-to-one trust consultation maximum 1 hour lah. We won't I mean go a very long per session otherwise you'll fall asleep. Maximum 1 hour, maybe some simple questions, simple discussion, maybe half an hour can count him already to understand if you have a need to set up a trust. Normally, this kind of consultation, we will charge fees, but today's special only for Casey Lau's, what do you call that, audience today. So we will waive this 250. You just scan this QR code, answer a few simple questions, then we will arrange a session with you. So to have a discussion, don't treat it as a very formal physical one. Just try to understand whether you need to have a trust. If not, then no problem. We can just have a casual talk to understand your needs or whatever. So from there, you can pursue from there. Yeah.
You don't have to meet physically, right? Or just a Zoom session?
All on Zoom. All on Zoom. I also
Zoom,
no strength to travel so many times. All over Malaysia, right? Your audience.
Yes.
Yeah. So just scan this QR code, and then we will make arrangement with you.
Awesome. So thanks, Casey Chong, for this offer. So you're not talking to Casey Chong directly, right? Do you might pass your some of them, it might be your other consultant.
Yeah, correct. Maybe depends on my time available time. So most of the time I will handle myself, but then if really clash with other appointment, then maybe I will get my assistant or my other team members to help out.
Okay, awesome. Okay, now, Hasrul Nizam say, I bought policy. Normally we buy with a lot of stuff, right? All the riders, medical card, everything. So how can we just transfer only the death benefit in that policy?
Oh, cannot.
You cannot.
Once you have attached with many riders, when you transfer, you only can transfer the whole policy. So another option is that you can take out another new policy, only cover for life insurance, which is much cheaper in terms of premium. Then you just transfer this policy.
Yes, use another policy. Don't use those.
The other one for medical or even your critical illness, all this you save it for your other purpose.
Yeah. What if the policy lapse? What happened?
You mean the inside the trust one?
Yes.
Normally before they goes lapse or before forget to pay premium or whatever, so the trustee will remind you again, or your insurance agent will remind you. So if you really think that you don't want to continue the policy, you may just leave it lapse. Let it lapse. So it will not penalize you if the policy already lapsed.
Okay. So if to use life insurance for trust, do we need to revise insurance policy to do so? Maybe,
it's good
maybe
to
not.
Review. It's good to review because some people already bought a lot of insurance, but just that they have not transferred to the trust, the trustee. So maybe you can pick a few to be transferred there.
Yeah. Okay, Alomaja, can a non-Malaysian working in Malaysia set up trust in Malaysia, and will the trust have jurisdiction overseas?
No, you can also do that. Even you're a foreigner, you can do it here.
You can do it here, and then of course if your beneficiary, let's say they are overseas, they still can receive the money, right? There's no issue with that. Yeah.
If your beneficiary are overseas or whatever, so they can still receive the money.
Okay, how about if I set up a life insurance package in Singapore, which insured 1.5 million Sing dollar, very subject to LHDN stamp duty upon the money is disbursed out to my family in Malaysia?
Yeah, the what do you call it? The stamp duty will only be charged when you transfer the policy to the trust corporation. So in Singapore, I think I'm not very sure because I have not done the Singapore case. So I think that the time I talked to one friend, I think they don't their income tax, they don't charge when you transfer the policy into the trust corporation.
You can do this in Singapore, right? Same setup. You can do it in Singapore. You don't have to do it in Malaysia.
Yeah.
Okay, Prabhakaran, is stamp duty charged for Takafu policy if it is HIBA for insurance trust, or is applicable for conventional insurance only?
Or Takafu, I'm not very sure. I think still applies the same. Yeah. Same. Yeah.
Okay.
They will also charge stamp duty on that.
Okay. So Kim Xiao say, anyone lobby for repelling this stamp duty? I think
many people feedback The most badly hit one are those trust corporation
Mm.
and
I think
insurance.
they
Insurance,
should be the one who
insurance,
will be lobbying, right?
yeah, correct. They will do all the lobbying. But until
Okay.
today, after two budget has been passed, but nobody mentioned about it.
Okay. Can retirees still buy life insurance to put into trust?
Can
Yes.
can
Yes.
can as
As long
long
as
as
you have
you are
money,
insurable, as long as you are
and
insurable.
also health lah. You have the health to do
Ah,
so. Okay. Why is it only safe from debt settlement if more than 5 years, meaning if less than 5 years is subject to creditor's claim?
if you still owe people money and people will still come after
Yeah.
your what do you call that? Because there are some term and condition one. You cannot say that your condition must be irrevocable trust. In Malaysia, you must
Have to be
only set up an
irrevocable.
irrevocable trust
Mm.
and subject to the 2 to 5 years rules. Meaning
Mm.
within first 2 years, if you transfer your asset into the irrevocable trust, it is still claimable by creditors within 2 years. But from 2 years to 5 years, within this period of time, you need to prove that whatever that you transfer in is not using the creditor's money.
Mm. And then after
But
5 years, then
after five
safe.
years, then it's safe already. But it must be irrevocable trust. Irrevocable.
Yeah, basically
Irrevocable trust double
is
A.
to have this because is to safeguard the debtor lah, right? The
Ah,
creditor,
yeah.
the creditor. Because some people when they do business, it feels foresee that I cannot run this business anymore. Then I go borrow a lot of money, and then you set
And
up
then
trust,
quickly
and
set
then
up a
you
trust, then
then it's safe. Then it's like giving you a way to cheat other people's money, right?
alright,
So
you're right. That
it's
is
not allowed lah.
against the common law.
Yeah, it's not allowed lah, right? Common sense. Okay, trust no need to be latest as using latest will.
Huh?
Trust once it's set up, it is already there. So
Yeah.
but
Immediately it will.
will when you write a new one, it supersede the old one.
Yes, exactly.
I think that's what he means, right?
Yeah, correct.
Mm.
Trust
And
once you set
then
up already, it can be used already.
yeah, it's already there, right? So and then you can set up a few trusts.
Yeah.
Not like will, you can only have one will.
Yes, you're right. Will only have one. You can only have
Yeah.
one last will, one last will. You can
One
have
last
many
will.
wills, but you only the last one valid.
Yeah. To avoid old age mental illness, people say they do open joint bank accounts with the old man.
You mean join account with the younger
The
children?
younger children, I think, right? If
Can also
old age, can also.
It depends on whether you trust your children. Because if you
Okay.
join in with them, then the old man mentally sick already. Then the younger one or in rush for money, then maybe he will consider to take away the money. But that money maybe is meant for other siblings. But this, if you join in with this guy, then this guy take away the money also. You cannot say anything.
Okay, so like Hasrul Nizam said, okay, when we set up a trust, we transfer the properties. But can we still use the property? Let's say house, like if you transfer the house into the trust, can we still use it?
Can.
Yes.
You can still stay in the
Yes.
house. You can still collect rental.
Yes.
Then only that you cannot sell. You cannot sell it without what do you call that? It depends on the purpose of setting up the trust. If it is a revocable, then you can revoke the trust and then transfer back the trust, the property.
Then you can sell.
So you incur another round of legal fee and stamp duty.
And then cash, if it is cash, then actually you can be the beneficiary as yourself also. You put the money in, and then you as yourself as a beneficiary, so you receive the cash also.
Even life insurance, because there is a clause that cover TPD, total permanent disability. So even disabled already TPD, when the insurance money is paid out to the trust, then you can use the trust to take care of yourself first. Maybe coma or paralyzed or cannot take care of yourself, then at least there are money coming in so that you can employ someone to take care of you.
Yeah.
You can also do it for this purpose.
Okay, how to choose a good and reliable trust corporation?
Very good question.
Yep.
How to choose? First thing must be able to sustain in the market for quite a long time, and it must be backed by bigger financial corporations like a bank or whatever. So at least you can You can do. I mean, it is actually even a small legal firm can set up your own trust corporation. There are many. Recently, many trusts being set up. There are many trust corporation being set up in the market. But how are you going to choose the right one?
Yeah.
So
okay.
And there are many people use it for the purpose.
So it is best to ask them if they have done your similar cases, right? The trustee company that has done your similar cases. I think those are the one you want to go with. And who already set up who already have client for many years.
Yeah, correct.
Okay.
The track record is very important. Track record.
How many percentage charged by LHDN charge us for transferring? I think we talked about that already. Okay. Who are those reliable trustee company? Okay. Same question. I still don't quite get the idea of irrevocable trust. Can you give real life example of how this can be used other than protection from creditors?
Okay.
So,
yeah, mainly is for this purpose for this I mean creditors protection trust because otherwise why would you want to set up irrevocable? Because you cannot revoke it. So any asset that you transfer in, if cannot be used for yourself, then it cannot be taken away by the income tax. I mean by the creditors. So that's why irrevocable trust, you want to be creditor proof, definitely you have to set up an irrevocable trust.
I think those people who need this will be business people
business people,
who have a lot of debt, who use a lot of debt to run their business.
If you have accumulated a big lump sum of wealth, then you don't want to lose it if anything happens, if any financial crisis happens. So at least you safeguard a big part of it for your own retirement and your own family use. And the rest you go and continue to fight for your business. So at least this part of wealth is protected already. It can be used for your, for your maintenance of your family. Yeah.
Okay. So that means usually normal people will not need to do a irrevocable trust.
Normal family, if they don't foresee a high risk in
need for that.
There's not.
Can an insurance company also be a trustee?
Normally they don't do it, but
they don't do the business.
Yeah, but in life insurance, because if you follow the Financial Services Act, a statutory trust is being created if you have created the trust nomination. Meaning, if you nominate your spouse, children, and when you're single, you nominate your parents, it is considered a trust. This is a statutory trust. Statutory trust is even higher compared to the agreement kind of trust, a contractual trust.
Yeah.
So that one is even higher for insurance company. Once you nominated the right people, then you are considered, you already set up a trust, statutory trust, and it is free from your creditor's claim and not subject to the estate.
Nice. Dr. Ghazali said, we have a few more questions. Sorry, did I cut you off?
For non-Muslim, for non-Muslim, you when you buy conventional insurance, you cannot have the advantage of the trust nomination. So you must buy takafu. So when you buy takafu, you must choose hibah. Some insurance company have hibah, some don't have one. So you must check with them, check with the agent, the takafu. So whether the policy that you bought is the certificate that you bought is able to do hibah, and hibah is even more powerful than the normal conventional trust. Because conventional trust you can only nominate spouse, children, and parent. But for takafu hibah, you can hibah to anyone.
If you have a special purpose, special people you want to take care of, then hibah is a very good way to do it. Okay, can foreigner participating in the MM2H program establish a trust? Yes.
Yes.
How can we obtain a comprehensive plan? For doing so, contact Casey Chong. Free consultation, 1 hour. Okay. How much money need to go on trust and how much money go for will? Also contact Casey Chong.
This one we will help
everybody
you to
different.
calculate. Yeah, we will help you to calculate.
Yes, everybody
Okay.
different, right? You might have
Then,
2 children,
yeah, help you to calculate how much fund is needed in your trust, whether you need to set up a trust, whether how you want to segregate out, then for what purpose, then this one all we need to calculate.
Yep. When you revoke an insurance trust, is there any charges? Yes.
Yes.
The stamp duty and also
It depends on if it is insurance, then when you reassign back the insurance out from the trust corporation, then LHDN will charge you another round of stamp duty. And also cancellation of the revocation of the trust. I think the charge depends on companies. Maybe some charge 500 to revoke the trust. Because when you want to revoke a trust, you need to draft another revocation of trust deed to revoke that original trust. You need to draft another another
so
trust deed
another
to
document.
another
work.
document, another legal document to supersede the old one.
Okay. Any book about this topic?
Book there are. You need to search from Amazon. You ask Casey lah.
From Malaysia one, I think they used to have, but that book is quite dated, right? So you can find on bookstore.
There are books. To Malaysia context one. I have seen a few trust corporation companies, founders. They have written some books related to trust.
Okay.
Very interesting to read.
Can husband and wife combine to set up a joint trust?
Yes, you can do that. Yeah.
Okay, so yeah, I think we have covered all the questions. So if you need more consultation, your personalized the consultation that you need, definitely contact Casey Chong. Right? Thanks for giving us the opportunity to for my members to actually contact you and get the consultation. So thank you very much everybody for attending. And actually the first webinar we are featuring Casey Chong. The second webinar we are also featuring Casey Chong. It will be the same topic. So next week, same time, Tuesday, we are going to repeat this in Chinese. So if you want to learn more the details in Chinese language in Mandarin, we'll be speaking in Mandarin. So you can come back on. So how to get the invitation? Make sure you're in my email list. Make sure you are checking on my Facebook page and make sure you are in my Telegram channel as well. So
is it next week? Is it next week or another week? 16, right?
Is it next week? Okay. Okay. Let me check. Sorry. Let me confirm. It's next week, though. It's next week,
next week.
In my calendar is next week. So are you okay with that? Okay. So thank you, everybody. Thanks, Casey Chong.
Thank you.
See you again next week.
All right. Luckily, you'll tell me it's next week.